Holy smokes everyone, we're in some serious doo-doo right now. The stock market is falling, gold is falling, Bitcoin is falling, doggy coin is falling, there's nowhere to run or hide. What just happened today is everything we have been talking about on the channel. The latest CPI numbers were off the charts. Inflation is officially here, the inflation of the 1980s, but the central banks are sitting in their ivory towers watching the peasants go out there and scramble just to get fuel for their cars. In this video, I'm going to be going over the latest inflation data that was released today, which was well above expectations, and I'm going to be going over how we can prepare for the inflation crisis that is already here. Okay, let's not waste any time, let's get right into it. Okay, so let's go over what happened in the markets overnight. So the Dow Jones Industrial Average fell around 2% at 1.99%. But it gets worse, the S&P 500 fell 2.14%. These are some of the biggest losses we've had in months. But of course, this is bad news for the high growth tech stocks, which I've been telling people over the past months, 2 months to get out of, get into, if you're into stocks, some value stocks or commodities. The Nasdaq fell 2.67% today. And the index that saw the biggest declines was the Russell 2000, down 3.26%. So why did the stocks plummet today? Because what I've been trying to warn people that inflation is much higher than they're reporting, inflation is going to come, and the Federal Reserve is going to have to start tapering its quantitative easing if they do their job, but I'll get into that in a minute, and they're going to have to start lifting interest rates. And like I kept trying to drill into people's heads, for every 1% interest rates go up, even if the Fed doesn't lift interest rates by 1%, but if the US 10-year Treasury goes up 1%, then that means stocks have to fall 10%. And if inflation gets out of control, and if we just get a 3% lift in interest rates, the stock market and the housing market is going to crash, and it's going to crash hard. But we'll have to see how this plays out if they actually do lift interest rates. Okay, so let's have a look at the latest CPI data that was released today, which was 400% higher than expectations. That's right, 400% higher. And we're starting to get inflationary numbers like what we saw in the 80s. Okay, so the latest CPI data that was just released today says the CPI index rose 0.8% just in April alone. So annualized, that's 9.6%. That's nearly double-digit inflation growth like we saw in the early 80s. And the Fed keeps saying, oh, this is just transitory. This is just temporary inflation. Well, when he says transitory, how long is that? Is that a month, a year, 5 years? He hasn't defined how long transitory inflation is. And here's the thing, the inflation damage has already been done. People's monthly budgets have already skyrocketed. Food prices, energy prices have skyrocketed. And we'll get into exactly the breakdowns of the CPI data to see what items have increased the most. But something crazy Jerome Powell said in his interview with 60 Minutes is he said, we can afford temporary inflation. Well, who can afford temporary inflation, Jerome? You, a multimillionaire, someone that has millions and millions of dollars in stocks and corporate bonds with BlackRock, where you bailed out BlackRock by buying corporate bonds. You set up the Federal Reserve's program to buy corporate bonds through BlackRock, who you have millions of dollars with. Where's the conflict of interest? Where's the outrage? The central banks are not going to stop until you don't have enough money to buy food to eat and fill your gas up with car. Where's the outrage, people, like in 2008 when there was Occupy Wall Street? These central bankers have to be stopped, and they have to be stopped now because they're playing with fire, and we're the ones that are going to get burnt, not them. And listen to this, everyone. The index for all items less food and energy rose 0.9%, and this is what the Federal Reserve looks at. In April, its largest monthly increase since guess what? 1982. What else do they need to see that inflation's here? Inflation's out of control. The job's already back. It's just because of all the stimulus checks, people aren't taking them. Now, not all of them. I know some people want to work, but the majority, the jobs are there. They just don't want to take them because they're making more money from the government. So they've already hit their mandate of 2% inflation. It's now double that. The annualized inflation rate is now 4.2%, and that's the official number. We all know the real number would be at least double that, and they've already got the majority of jobs back. But what's the point of having a job if that job can't pay for all the essential needs like food, housing, and energy and transportation? Look at this chart, everyone. They're saying it's just a base effect. Don't worry, don't panic, everyone. This is just a base effect. Well, year over year, yes, it is a base effect, but month over month, it is increasing. And there's no base effect with the month over month data. It's rapidly accelerating. Look what happened. In December, 0.2%, then January, 0.3, Feb, 0.4, March, 0.6, and now April, 0.8. So there's no base effect with month over month data. Can't you see it's accelerating, and they have to stop it now before it gets out of control, because once the inflation genie pops out of the bottle, it's very hard to put back. And everyone, look at the energy prices. They're absolutely skyrocketing. Gasoline, all types, is up 49.6% year over year. That is hyperinflation right there. But, of course, I should have been telling you this. I don't know why I didn't see this. I've been trying to teach you how to hedge against inflation, how to make money, how to really build wealth. Well, if you wanted to build wealth, a year ago you should have gone to the car lot and brought up all the used cars. Used cars and trucks increased 10% in just 1 month, and they're 21% higher than a year ago. And look at this chart, everyone. I've been saying hedge against inflation, get into commodities. 2 months ago, I was telling you, get out of these high growth tech stocks, because with high inflation, that means interest rates are going to have to rise. When interest rates rise, that affects high growth tech stocks. But look at this chart, which shows you commodities 100% correlated with inflation. As you can see here, the black line is the commodities index, and the red line is the annual PCE inflation, and the blue line is the annual PCE core inflation. And if you look at that, with the way commodities rise and fall, so does inflation. But the Federal Reserve, Jerome Powell, when he was asked about commodities rising, if that's going to lead to inflation, he said, nah, that's just commodities. That has nothing to do with inflation. Well, although you don't buy commodities directly, it takes commodities to build things and make things. So if the cost to make things go up, then the products are going to go up. It was so obvious, I don't know why people couldn't see it. And look at this chart, everyone. The largest quarterly increase in wages since 2003. That's another huge sign of inflation. And you know why this is happening? Because now small businesses are having to compete with the government to get workers. And of course they asked Joe Biden, is his stimulus affecting people taking up jobs? And he says no. Well, look what's happening, people. Businesses are having to increase wages just to get people in the door. And same thing, Jerome Powell is saying, no, this stimulus isn't affecting people taking up jobs. We need to keep all the money printed going. We need to buy US treasuries. We need to buy mortgage-backed securities. We need to buy corporate bonds. We need to keep pumping trillions and trillions of dollars into the financial system so you can get a job, because we care about you, the little guy. People, that's complete BS. The financial system, the whole economy is completely broken, and they're the culprits. They're the criminals that cause this damage. What up is now down, and what's down is now up. I'll tell you the truth why they're not lifting interest rates, why they're not tapering. Because if they do, this whole financial system is going to completely collapse. People, this is not fear-mongering. This is not doom and gloom. This is just the cold, hard truth. But I don't know if you can handle the truth. And you think it's good what the governments and the Federal Reserve is doing, and it's pumping up your stock markets, it's pumping up your bags. Well, yeah, it may be good if you got $2 to $5 million, but if you only got a portfolio between $10,000 and $200,000, it's not that great, because the cost of living is going to rise faster than your stock portfolio increasing. So everyone, this is not a joke. This is not a drill. Inflation is here. It's going to increase. Hopefully, the Federal Reserve does its jobs and starts tapering right now. Don't wait 6 months for the damage to already be done. Don't wait 6 months to start lifting interest rates. They need to start lifting interest rates now and tapering now, because if they don't, inflation is just going to run even hotter. Okay, so what can we do to protect ourselves? Well, for all my loyal followers that have been following me on the channel for the past 2 months, I've been telling you, screaming at you, get out of stocks or take some profits out of stocks. You don't have to sell all of it, but you want to start diversifying into some inflation hedge like commodities, because if we do hit borderline hyperinflation, commodities will skyrocket with it, and hopefully that will dampen the effects on your monthly grocery bills going up. Again, all stock market indexes fell a lot today, but the DBC commodity index, it only fell just by about 0.1%. So even though it didn't increase, in real terms, you would have actually made a 2% return, because the stock market fell 2% while your commodity portfolio held strong. Now, normally Bitcoin would be a hedge against inflation, But today there was bad news for Bitcoin, and Tesla announced it's no longer going to be accepting Bitcoin for Tesla cars because of the environmental factors. And we all know that gold and silver precious metals should be a hedge against inflation, but the bankers have been heavily manipulating the precious metals market, so I think commodities, again not financial advice, will be a better bet than precious metals over the next year. So everyone, buckle up, it's going to be a wild 6 months ahead. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest happening in the economy, stock market, housing market, and global finance news. If you're bored, I'll put up some other videos here. I'll see you there.